Hello, Christian Financial. Thank you so much for watching our show on our channel with Angelo Christian live every Thursday, 6 p.m. Central. We're back again. Every Thursday we do this. We're committed to serving you guys, making a difference, and educating you, empowering you on finance, real estate, credit, and lending. Got a lot of exciting topics that I want to discuss tonight. I hope you guys are ready for spring. The spring air is here. It's coming. We're getting out of the winter. Thank God. I can't stand the winter. I'm down in Texas, and I love the warm weather. I love tropical weather. So I'm really looking forward to having spring come out, and looking forward to some of the great programs that we're offering right now in 2022. Very excited to talk about a lot of things tonight. We're talking about $1 million homes. $1 million home prices are surging. One of the hottest market right now is $1 million listings. First-time buyer tax write-off, another thing I want to talk about tonight. Self-employed. I want to talk about why self-employed people are getting denied so much and what are the solutions around that. I want to talk about hard money lending. So these are the topics I want to go over tonight. And remember, we give away our free Amazon gift cards to all of our followers. You give us a 5-star review on Google, we'll hook you up with a free Amazon gift card. We also do a test question at the end of the show and give you a free Amazon gift card. We've been doing lending in America for over 20 years. It's where America goes for funding. You can call or text our office at 832-431-6331. Also next month, we're getting ready to roll out a brand new rap video that my man Jeff Reno, our marketing manager, produced. He wrote it. I sang it. I'm the lead singer, and I got a brand new rap song coming out next month. That's going to be really fun. Check out the video. Should be coming out in March. That's going to be very exciting. So March is looks like it's going to be a really fun, exciting month for us. So, and again, if you guys have anything that you want to talk about, you have any questions, anything that you want to go over, feel free to hit me up in the message box below. I want to know what you guys are thinking, what questions that you have. Last week we talked about the big announcement with FHA changing their student loan landscape forever. Dropping their hat from 1% to 0.5% of the student loans. Huge change, big change, helping people to boost up their pre-approval. We did talk about interest rates rising in 2022. Interest rates have gone higher, so we got to deal with that. There was a record. The Wall Street Journal today that's saying people are prepared to deal with the higher interest rates. So I'm currently working with the truck industry, and I drive for a company. Awesome. Well, we can we help a lot of truck drivers. We help truck drivers all the time to get funding. So we have special programs for truck drivers. We can use your 1099, where you get paid by the freight, paid by the load, paid by the mile. We can use your bank statement. So there's a lot of ways around how we can help you if you're a truck driver, so don't worry. We can definitely help you. Give us a call or text us. Oh, and you're self-employed. Yeah, we can help you with that too. So call or text us at 832-431-633. And we have a lot of special programs for self-employed, especially truck drivers. I've helped a lot of truck drivers to get pre-approved to buy a home when their own bank denied them, and we actually got them approved for the house. So, don't be shy. Reach out to us. We're a very open company. You can call or text us 7 days a week. And the thing is how we operate, and I say this all the time because I'll never stop saying this. So we are going to be here to help you to figure out your solution. Our spirit is in line with your spirit to help you to get the loan, to help you to get approved, help you to get the funding. We're not like most lenders, most mortgage companies where hey, you don't qualify, you get denied. I don't want to talk to you. I don't want to have anything to do with you. No, we don't think like that. We want to figure out how to structure the loan, how to get you approved, how to make the deal work, how do we get it done, right? That's how we're different. We care about you and getting you to the finish line, helping you to get approved, helping you get funded for your home. And we'll help you to figure out, whatever it takes to get that loan going for you, because that's what we care about. We care about you in the end. We're here for you. So truck driving loans, absolutely, definitely can help you with that. If you want to hook us up with Google reviews, and you can get us as many Google reviews as you can, please do it. We'll hook you up and give you unlimited Amazon gift cards. We just want happy customers. We want happy subscribers, happy viewers, happy customers. And we're going to do everything that we can to keep that going. My goal is to get to 500 Google reviews by the end of the month. We're very close, so anything you guys can do to help that, we definitely appreciate that. We'll take care of you. So remember, we're a nationwide mortgage company. We've been doing this for over 20 years. We do all kinds of loans. We do commercial, we do residential, we do government, we do no documentation loans, private loans, hard money loans, investor loans, all different types of funding here to help you guys to make it happen. We're committed to your success, to your excellence, and do whatever it takes to help you, to show you the way to get funding, because that's what we're passionate about. So anyway, if you guys have questions, let me know. I'm going to start going to some of the topics I want to discuss tonight. Remember, we rolled out for February our Call with Angelo. That's tomorrow, 11 a.m. Central, so you can watch that tomorrow, Call with Angelo. People call in, we go over their scenario, they ask questions. We'd love to hear from you guys on Call with Angelo. Please reach out to us at 832-431-6331. It's a live call. We talk with me directly. We go over your situation. We figure out how to solve it, figure out how to get you a loan. So please reach out to us. We'd love to hear from you. So first thing, as I mentioned tonight, $1 million listing. $1 million real estate is one of the hottest things right now in America. It's selling faster than any other market right now, is the $1 million range, because home prices have risen so much, inflation, and people's wages. You know, you're in a situation right now where $1 million is the price point for a house, and these are selling more. So then, before, the $300,000 price range was the ticket. It was the hottest area to buy a home. Well, that's been kind of set aside for the $1 million listing. If you look at it at an aggregation nationwide, that's the hottest market right now. And we're poised in position as one of the best lenders to help you for that $1 million listing. We have programs with only 5% down, guys, with no PMI for $1 million home. So you can buy your $1 million home, put only 5% down, which is $50,000. You don't need $200,000 down, and you don't pay mortgage insurance. So this is a no-brainer, because most lenders on $1 million want you to put 20% down. Okay, and you have to have 6 months reserves and 3 months of closing costs. So on a $1 million home, if you go to a bank, they're going to want 20% down. The closing costs are 3%, so that's $260,000 down, and then you have 6 months reserves. That's going to be another $30,000. You're going to have to show $300,000 in the bank. A lot of people don't have that kind of capital laying around, so they don't buy a house. They just give up. They say, I'm just going to rent. I'm going to rent a high rise. I'm going to rent a townhome. I'm going to rent an apartment. I don't have $300,000 down. That's where we say you can call Angelo, ready to get next step with the earnest money. My offer question, we want to make a lower offer. Okay, very good question. So on the thing is, on your offer, you said you want to make a lower offer and get renovations. So here's the thing. There's a lot that goes into that. Okay, I know that's what you want to do, but you also have to look at the reality. I don't know what area you're in. I don't know who your realtor is, the condition of the home, but all of this stuff plays a role. Like for example, I'll just tell you, most of my clients, if they're buying in a hot market, you're not going to be able to lowball an offer. You have to be realistic with this if it's in a hot market and the property is in good condition, because there's 10 other buyers right behind them that are going to buy the house. If the house is in bad shape, okay, in West Virginia, maybe the market, honestly, I don't know too much about the market in West Virginia. It's beautiful. I've been to West Virginia. Hi, Miss Gail. It's beautiful there. I just don't know too much about the market. I'm gonna assume that it's not, New York City, or Miami. So you could probably negotiate a little bit, and try to. Hey, Chris, thank you, man. We appreciate you, Chris. Thank you, brother. We appreciate you, man. Looking forward to helping you become a homeowner. It's definitely been a journey, my friend. So just got to go through the process and never give up. But, what I would say is, because here's the thing. And I don't know how many people that are watching this have bought homes before, but buying a house, and Angelina is your officer. Okay, great. So the thing is that, okay, beautiful, Miss Gail. Thank you, hon. We appreciate you for reaching out. You're very kind. So what I would say is, the thing I want to just I'm very straight with people. I don't want to beat around the bush about anything. So we have to look at the property. We got to talk to your realtor and see if you're in a situation or position where you can make a low ball offer or try to get the price lower, if the house is in good condition, and there's multiple offers, they may not want to consider that. So if the house needs repairs, you might be able to offer something lower, or there hasn't been too many offers on the home. So we got to talk to your realtor to get a better gauge on what's going on with that house and the market. I haven't seen too much activity in West Virginia, so I think that it might be okay you can do it. But let's say that you make a low ball offer, and there's 5 other offers on the home. The seller is going to be inclined to go with someone else's offer. Okay, this happened to me. I was trying to buy a house a year ago, and this is in the peak of the housing market. And the seller listing agent never told me that there was multiple offers, and I made a low ball offer, and I wanted the house. But, I followed up with them a few times. I talked to them, hey, because the house needed some work, but it was in a very, very hot market. And I made a low offer and followed up with them. They said, no, well, the house is gone. Someone else came and, overbid you big time and took the house as is. I want all these repairs done on the home. And, it made me realize that it was a reality check for me because, there's other buyers out there that'll step in and buy. Now that's not always the case. I don't know for West Virginia, but in Florida or Texas or certain parts of the country, California, if you don't come in and buy, there could be another buyer a backup buyer that can purchase that property. And when it's a bidding war, some people will pay over the asking price. Some people will take the house as is. So you just, it's a different time, than 3 years ago or 4 years ago or 5 years ago. You have many buyers right now in the market, and you have very low inventory. So I just, I don't know how aggressive you can get with your offer is all I'm saying. So you might be able to do it because West Virginia may not be as competitive, but there's a lot that goes into it, and I don't want to give you the wrong answer because there's a lot of data that goes into it. So I hope that helps you. But anyway, going back to $1 million listing, it's a very hot market right now for $1 million is a sweet spot for real estate in America right now. So I was talking with somebody before I got on the show tonight. He's buying a $3 million home in Florida. And he's like, well, hey, Angelo, I think that, I'm probably going to lose money on this deal because the market's going to pull back. And I said, man, you can't really think like that because, yeah, it may pull back a little bit. But in the long run, if you buy in the right location, American real estate has proven to be one of the greatest investments of all time over the long run. If you buy a $3 million house in West Palm, and hold on to it for 20 years, you're not gonna do bad with your money. Now, if you're trying to flip it in 6 months or a year, it may not be a wise investment. But if you're making good investments and you're holding on to them, so then it can make a lot of sense to invest. So I'm a big advocate of home ownership, and if you're wasting money on rent, it doesn't make sense to waste money on rent. And what I was going back to earlier, we have a lot of great programs in that $1 million price range. We have construction loans, one-time close construction, and jumbo construction. We're one of the only lenders in America that has a jumbo construction loan. So we're very pleased to offer that. We have a first lien HELOC loan, jumbo. We have a jumbo no PMI with a HELOC. We have a straight jumbo program. We have a self-employed jumbo program. So we have all these jumbo loan programs to help all you guys out there to purchase your high-end home. And we want to be able to help you be the front runner, the pioneer, to get you that funding, because that's what we're here for. So, and we've been doing it for over 20 years, and we're very proud and happy to be able to do that. We work very hard to get you guys your funding packages, and sometimes it's not easy to do. It's sometimes very difficult, but we never give up. We're committed to helping you to the process. Hey, Tomas, what about VA? Yeah, VA jumbo. Yeah. So, that's one of my favorite. I'm glad that you brought that up. VA jumbo is one of my favorite loan programs. So the VA got rid of their loan limits. Amazing, unbelievable. I'm so happy they did that. And a veteran has no limit on the price of a home they purchase. So, I mean, I've done VA loans for 2 million, 1,700,000, 1.2, 670, 700,000. There's no limit. They don't follow conventional limits. They don't follow FHA limits. So if you're a veteran, you can go up to as high as whatever you can qualify for with your income. So it's a really, really cool program because, I mean, where else can you go and get, a VA jumbo loan? It's amazing. And 100% financing, no PMI, no location restrictions. Really, really awesome. So if you're a veteran and you have VA benefits, I mean, you got to be looking into getting a VA loan. I mean, we just closed, on a jumbo one earlier this week for a client for 1.6 million. And it's very exciting to see someone get a low interest rate, 100% financing, get their closing costs included. Can I not lock in the rate? Well, yeah, yes, that's a good question, Chris. So the way it works is it's a one-time close construction, right? A VA or a jumbo construction, it's a one-time close, meaning that you get the funding for the land if you don't own the land. If you own the land, you get credit for the land equity. You get the construction loan and you get the permanent loan. So you don't have to reapply and do a secondary loan after the construction is done. The loan will automatically roll over to a permanent loan. Now, the thing is, because it's jumbo, it's not conventional. So pre-qual, Miss Gail, can take anywhere from, bank statement loan can take anywhere from a week to 2 weeks for the pre-qual, because we do the underwriting up front. We've got to check everything up front. So it's not like a regular loan because they have to underwrite the loan up front. But going back to Chris's question, so because our company is making the loan on their balance sheet, making the loan to you directly, there is no warehouse line or credit line or investor. Because it's jumbo, there has to be an adjustable rate during the construction period. Okay, so during the construction period, it adjusts with the market, with whatever the prime rate is, because there is no secondary market for that product. There is no takeout lender to give you a construction loan or that big of a loan. So we're just lending you the money, but we're going to keep it as an adjustable. Now, when the house is done, you don't reapply for a second loan. You're still with us on the same loan. But then at that point, when the house is done, it'll roll over to a permanent loan, and then you lock in the 30-year fix. You're not doing a new refinance. You're not doing a secondary closing. You've already closed with us. But at that point, you're eligible to lock the rate. Okay, so I do foresee that rates are going to go higher. I do. We knew that interest rates were going to rise. I mean, it was a fact of that what's going on right now in the world. Everything's rising. That's the issue. Same time frame for 1099. Yes, Miss Gail, because it goes through the same underwriter. 1099 loan is the same underwriter as a bank statement loan. So I know it's not what you want to hear, Chris, but it's the truth, and I can't. I have to tell you the truth. I can't make anything up to you. So rates have gone up, and I'm not happy about it, but you have to deal with it. And I mean, it is what it is. I don't know. There's nothing I can do. I'm a very small fish in the pond. This is a macro global thing that that's happened. And I mean, you just have to deal with it. The best that you can. The thing that the idea is that if rates have gone up, the thinking is that everything else has gone up. Your wages should have gone up too. So in a sense, it kind of offsets one another. I mean, that's what economists say. I don't know. I mean, I can tell you that I've seen the cost of everything go up. Food's gone up. Utilities have gone up. So your income hopefully is going up too to cover that. the issue where you run into a problem is if you have inflation, but wages stay flat, then that's where people run into hard knocks. And I certainly don't want that to happen to anybody. But all I can do is report what I see. Yeah, Chris. I mean, the thing is that we're going to do everything that we can to help you and get your loan funded and everything. But it's just there's so many things. There's so many regulations with loans too. You're going to have inundated, bogged down with the amount of regulation that's on lending too. So I wish I could lock your loan in right now, and we could do that. But here's the thing: if it's a conventional loan, conventional loans can be locked in today for a year. But once you go into a jumbo loan, I mean, there's no market for construction jumbo. We have to make the loan to you directly. So that's kind of how it works. So those are very good questions, though, and I think that'll educate a lot of people on this show to teach them about how construction loans work. I think it's good to build. I mean, I think that's fun. I mean, you only live one life, and you want to build a house and enjoy it, have it your way. If you can't find the house that you like, I think it's I built 3 homes for myself, and I used to own a construction company. It's very exciting. It's a very exciting thing to do. Life is short, and I wouldn't settle. If you can't find a house that you don't like, settle because you're worried about an interest rate. If you don't love the house, you're not going to want to go to work. I can promise you that. I mean, you got to love the house. You got to love the house. It gives you the energy, the vitality to go to work, hustle. That's my opinion. I'm not going to go hustle if I don't like the house. So, yes, Ida. Hi, Ida. Yes, USDA loans USDA is different. USDA is a government loan. Those are only fixed rate loans. USDA is only fixed rate. There is no adjustable rate for a USDA. That's a United States Department of Agriculture. That's my thinking. I'm not going to work all day and night if I'm coming home. So now I'll do it for a little bit if I'm building a house. If I know I have a vision, if I have a goal that I'm going after for the future, I don't mind doing that. But it's up to everyone. Has their own opinions. That's my opinion. You have your own opinion, and you just gotta whatever you like. I mean, I've suffered a lot, and I had to work very hard to get where I am today, and lived in a lot of trash houses. But I always had a dream that I'd be in a better home, and I never lost sight of that vision. So I'll say that your past doesn't equal your future. And don't ever forget about tomorrow. Cost per square foot, that's a great question. Yes, I have an idea about cost per square foot because I used to own a construction company, and I'm very active with a lot of builders. You're seeing cost per square foot. Now, you're talking about the cost to you, or what is their true cost? Because your cost is going to be different than their cost. Depending on high-end areas, some areas is $350, $400 a foot. Some areas is $200 a foot. It depends on what part of you said California, Southern California. Oh, for you to build it. Right now, with lumber prices and everything, maybe $200 a foot. Something like that. $250 a foot. Depending on what you're going to put in the house, depending on, there's houses can get very expensive. If you're doing all custom cabinetry, you're welcome, Chris. We wish you the best, brother. If you're doing a lot of exotic stuff, it depends. If the land is very expensive. Yeah, land is very expensive. Lumber is very expensive. If you do a lot of custom work, a lot of, depending on what, the smallest loan that we can do is $150. right now, and that's probably going to go up to 200 soon because I mean I haven't seen a $150,000 house in 5 years. So it's going to be tough. I think I think that market is going away too. It's going to be really hard to find a house for $150,000. They're still out there in some parts of the country. We'll do them. In fact, we can actually do a loan down to 100,000. Yeah, lumber has gone up a lot. Yeah, it's insane. Yeah, Lehigh. Oh, Lehigh Acres, beautiful area. Love it. Yep. Oh, Midwest. Yeah, Midwest, you could probably get, I've done some loans in Detroit for 80 grand, 100 grand. I have one of my good clients, and he buys a bunch of properties from me in Detroit, and we do 80, 100,000, 120. We don't have a problem with that. I mean, for you, Pink Lady, we'll do it. But normally we like to be, obviously bigger loan amounts, but we'll do a lower loan amount to help you out. And that's one thing I did want to get into next. I want to talk about tax write-offs when you're a home buyer. There are certain tax write-offs that you have, and I want to make sure you guys are aware for homeowners, the tax write-offs. You're welcome, Pink Lady. We love to help you. We're committed to helping to make it happen. We'll push. So tax write-offs when you own a home. A lot of people aren't aware that there's tax write-offs that you're eligible for when you own a home. So I want to put this out. I'm not a CPA. I'm not an accountant. I'm not a tax advisor. I'm just making this aware so you have this conversation with your tax man to bring these things up. So interest, the mortgage interest that you pay is a tax write-off. If you're a first-time buyer, you get a tax credit. That's a tax write-off. The points that you pay to buy down your interest rate are a tax write-off. If you do any type of repairs, maintenance on your properties, depreciation, those are tax write-offs. Those are 5 tax write-offs that you can use to reduce your tax liability on your tax return. So when you go to file your taxes, if you have interest, if you paid points, you've got a tax credit, you have depreciation, any of this stuff, you can use this to reduce your tax liability, okay? And this is an important thing because, if your tax liability is $100,000 and you had $20,000 of interest and points and depreciation, you've lowered your tax liability, right? So that's a very important thing. 5 powerful things for tax write-offs for you guys. And I want to make sure I talked about this tonight because it can help you to save you money. So talk to your tax person about it. He can help you more and explain more to you about how it works. But that's a really important thing. And I know that we have a lot of self-employed people on the show because obviously a lot of the people that we help are self-employed. I wanted to talk about that because I did an interview with the Fearless podcast 2 weeks ago. And the question came up, hey, Rakita, good evening, I hope you're doing well. The question came up, Joe asked me, he said, hey, Angelo, why do so many self-employed people get denied for a home loan from their bank? And it's really true because a lot of self-employed people, like the bank will take your deposits for your money, have no problem holding your money, taking your deposits. But if you ask them for a loan, they act differently about it. They're not able to get you approved because, maybe you had too many expenses. You didn't claim enough, net income on your line 31 of your tax return. So, and it's really frustrating that, self-employed people, what's built America is self-employed people, right? You have hundreds of thousands of small businesses that are employing people, grinding it out every single day, making work the economy for people, but they can't get a mortgage loan, right? They get denied because their tax returns has a certain number on it that underwriters don't like or that banks don't like. So, and that was my answer is that, what's emerged is the non-QM market, non-qualified mortgage. And it's catered to investors, catered to self-employed, to help people to get funding that looks past the tax returns, that looks past the credit score and actually looks at the person, looks at the business, and makes a underwriting decision based on the quality of the individual, the asset, and a more common sense underwriting, in my opinion. And something I think that's really, really going to be emerging more is private lending, non-QM lending, and what's going to kind of take over. I don't see, I mean, you know, the Fannie Mae fit in the box is great, it's cute and everything, but there's a lot of times where it just doesn't make sense for the customer, you know, to look at getting, like for example, with Fannie Mae, if you had, you know, lost your job or you went from one employer to the other employer and you're out of work for a month, that could be an issue for getting a Fannie Mae loan. Yes, you can. You can use the equity in your home for a first lien HELOC. You can pull that out for the down payment. You sure can. Yes, sir. Absolutely. You can do that, Chris. I have customers that do that all the time. So, but anyway, so you have self-employed is one of the biggest drivers in America, and yet they haven't been able to figure out how to give a home loan to them until we come along and are the premier self-employed lender, focusing on the largest buffet of loan products to help self-employed with no documentation, 1099 loan, bank statement loan, 1-year tax return loan, all these different products to help self-employed people so they can get into their house. And with great rates, with conventional rates. You know, so we are very happy to be able to help self-employed because we understand the benefit they provide in the economy and what they're doing here. So all I'm trying to tell you is don't lose hope. You know, don't think because if your bank denied you, you can't get a home loan. If you're self-employed, it's not true. You can get a home loan. You deserve to get a home. And that's really it. So whether you own a barbershop, you own a pharmaceutical company, you own a video store, you own a furniture store, whatever, you own a delivery business, you know, you own a glass business, you own a pen business, you own an aluminum can business, you can get a loan. You can buy a house. Okay, we've helped all kinds of self-employed people buy a house, right? So reach out to us. We've helped the ultra luxury self-employed, and then it's the restaurant down the street that, you know, they want to buy a house. You know, so we cater to everybody. We want to help everyone that we can. Well, that can buy a house. You have to have some credit and you have to have money. So I want to make sure that, you know, you guys understand there's qualifications. You know, you have to be able to put money down. You know, if you're self-employed, you have to put at least 10% down. Ideally have a 700 plus credit. So they'll go down to 620 on self-employed loans. But the thing is that if you're committed to buying a house, we'll work with you with a realistic plan to get there. There's no fairy tale or, you know, no one's just going to give you the loan like, boom, you get a house. But we'll work with you to come up with a plan to get you there. And that's our commitment to you guys, that we'll do whatever it takes to help you to make it happen. So we're committed to helping people, help America grow, helping, you know, hardworking people become homeowners, okay? So I appreciate all of you guys watching the show and the channel. You know, remember, you can always leave a 5-star review on Google. Good, we're gonna help you to get you your house. If you leave us a 5-star review on Google, we'll hook you up with a free Amazon gift card. Okay, so don't forget that. If you 5-star review Into the Woods, you already answered this. Okay, you use your credit cards. I wouldn't do that. Okay, that's a good question. Thank you, Rakita. We appreciate you. No, okay, I want to make sure I understand your question. You're about to close and you're thinking about charging up your credit card. I would not do that. Okay? So the lenders, they do something called a credit refresh at the end of the process to see if you take on any new debt. Okay, you're just using them as usual? Okay, then you're fine. If you're using your credit cards as usual, you're fine. Don't open up any new accounts. Don't do any other inquiries. Try not to charge them up too excessively. You know, you got to try to keep things, okay, it's less, then you're fine. Then you're okay. What you don't want to do, and a lot of people sadly make this mistake, is they'll go, under contract to buy a house, and then they'll charge up for their furniture, get a pool loan while they're in underwriting. Now, why people do this, I have no idea. But people do this stuff. And then they go to closing, and the underwriter checks their credit again. It's not a hard inquiry, it's a soft inquiry. And they'll check their credit and say, well, you took out a $20,000 furniture loan for your new house, and you haven't even closed yet. Now your debt ratio is out of whack. And now we got to start the loan over or redo the process. And it's absolutely nerve-wracking. So if you get any takeaway from tonight, do not open any new accounts during the loan process. Do not do it. Because you're open yourself up to more scrutiny, more issues that can come up. Now, not every loan has that type of check, but just for the err on the side of caution, just wait until after closing is the bottom line. But that's a great question. So anyway, I appreciate all of you guys watching the show on the channel. Remember, we have Call with Angelo every Friday, 11 a.m. Central. We produce 4 videos every single week on our YouTube channel. So we love you guys. Take care. Peace out. For the giveaway tonight, okay, I mentioned it tonight on the show. Oh, good. I'm proud of you. That's awesome. That's awesome. So I talked about it tonight. So who can remember the tax write-offs for homeowners? Whoever can mention, I mentioned 5 tax write-offs tonight for homeowners. Whoever can mention those is going to get the free Amazon gift cards. Whoever can tell me that tonight is going to get the free Amazon gift card. Who remembers what the tax write-offs, I mentioned there was 5 of them, were for homeowners. So whoever can tell me that tonight is going to win the Amazon gift card. Does anyone remember what we talked about for the 5 tax write-offs? There was 5 tax write-offs that you can use if you're a homeowner. Does everyone remember what those were? Were you guys paying attention? Who remembers? There was 5 tax write-offs. Whoever answers what those tax write-offs are will win the free Amazon gift card. So who remembers what that is? Does anyone remember what that is? And you don't have to answer all 5 if you don't remember. But I mentioned them earlier on the show. There was 5 tax write-offs. So who remembers? Interest, repairs. That's right, Miss Gail. You got 2 of them. That's good. That's good. You got a good memory, Miss Gail. You did. It's 2. That's 2 of you. You're right. It's 2. So does anyone else remember? No one else remembers? Interest, mortgage, points. There you go. Salt deduction. That's good. I'm going to give Miss Gail and Into the Woods the Amazon gift cards tonight. So please text me your email address. Salt. That's good. You made my night, girl. Or I don't know if you're a girl or a guy that mentioned that. So that's good. And Smart House. Okay, Rakita, we'll hook you up with an Amazon gift card too. So all 3 of you are the winners tonight. So just text me your email to the 832-431-6331. Please leave us a 5-star review on Google to seal the deal, and we'll hook you up with that Amazon gift card. We need your support. We need your help. Girl, I can't see too well. I'm sorry. It's a little camera. I'm sorry. I'll look at it later. So we appreciate all your help and your support. We'll send you over those Amazon gift cards. So thank you guys so much for everything. Again, we'll be back tomorrow. Call with Angelo. If you need anything, we're here. Nationwide lender. Take care, guys. Stay strong. Peace out. We wish you a great week. Bye-bye.